How can Africa win the war for investment? During a session at the World Economic Forum just ended in Davos, Egyptian Finance Minister Ahmed Kushuk reported that overall private investment in Egypt increased by 73% last year. He emphasized this growth as part of the government's broader strategy to enhance private sector participation and attract greater investment. Research shows that higher productivity in countries is less about labor intensity and more closely linked to access to capital for infrastructure, improved tools, and advanced technology, noting that such investments are key drivers of productivity gains. According to the McKinsey Global Institute, emerging economies can accelerate their development by investing in existing technologies. Their recent publication, A Century of Plenty, highlights how economies such as Bangladesh, China, India, Vietnam, and much of Central Europe have experienced rapid productivity growth primarily due to substantial investment. Conversely, regions like Latin America and Sub-Saharan Africa have seen lower productivity levels and continue to lag behind advanced economies, largely as a result of insufficient investment, which further impedes their progress. Still on investment, the Gates Foundation and OpenAI plan to invest $50 million to use AI to ease the impact of chronic staff shortages in 1,000 primary health clinics and surrounding communities in Rwanda and other African countries by 2028. The new technology could be a game changer in expanding access to quality care in poorer nations, Bill Gates said as he unveiled the initiative at the World Economic Forum in Davos. That was on Wednesday, adding that this support would accelerate the adoption of AI tools across primary care clinics within communities and in people's homes. Africa's investment appeal is rising due to reforms and stronger policy credibility, but competition is intensifying as investors increasingly focus on AI-driven transformation, which is drawing significant capital. Africa continues to be appealing due to its potential for high catch-up growth and strong returns, even though aid and concessional funding are slowing. With lower sovereign credit ratings, bonds are available but often costly. As a result, it is logical for African nations to tap into their own resources for investment and pursue reforms that go beyond simply catching up, reforms that deliver lasting progress. Most importantly, Africa requires a long-term vision for the next 30 years, especially as the world enters a new era of intelligent technology. Rapid digital transformation should be at the forefront, shaping an ambitious agenda that can be translated into large investable projects. These initiatives should receive backing from Africa-focused development banks, making them attractive to international investors who currently favor opportunities in Western, more advanced countries. However, without well-planned and targeted strategies, significant investment will not flow into the continent. The listing of additional companies, along with the privatization and public offering of many appealing government-owned industrial enterprises, also presents more significant investment opportunities for major industry participants to consider. Meanwhile, oil giant Shell companies in Nigeria yesterday announced plans to invest $20 billion in the Bonga South West project. Hello, this is Global Business Insight, where we bring thoughts and ideas to help interpret trends and navigate the context from business perspectives. First, some data. UK private sector output grew solidly in early 2026 with the fastest expansion rate in nearly 2 years, mainly driven by strong service sector growth. New orders continue to rise, boosting business optimism to its highest level in 16 months. However, input cost inflation remained high, leading to the largest increase in prices since August 2025. The S&P Global Flash UK PMI Composite Output Index rose to 53.9 in January from 51.4 in December, marking its highest point since April 2024 and maintaining above the neutral 50 for the ninth straight month. Service providers saw the strongest activity growth in 21 months. UK retail sales increased by 0.4% month over month in December, following a 0.1% decline in November, according to recent data. Markets had expected a 0.1% decrease for December. Core retail sales, which exclude automotive fuel, rose by 0.3% in December after a revised drop of 0.4% in the previous month, previously reported as minus 0.2%. This result was better than the anticipated 0.2% decline. The HCOB Flash Eurozone Composite PMI Output Index remained steady at 51.5, signaling modest output growth, though expansion was among the slowest since September. Manufacturing saw slight recovery after a decline at year-end, while service sector growth weakened to a 4-month low. The survey data indicate continued growth in Eurozone private sector output. That's in January 2026, driven by increased new orders and record-high optimism. However, companies cut jobs for the first time in 4 months, mainly due to significant layoffs in Germany. Flash estimates show that Germany's composite PMI rose more quickly in January, reaching 52.5 compared to 51.3 in December and surpassing expectations of 51.8. This strong growth in overall business activity was mainly driven by a robust services sector. Under an agreement brokered by Trump, TikTok has created a U.S. data security unit to keep operating in America, ending years of uncertainty. This joint venture will oversee data protection, content moderation, and software security, while ByteDance will still control main U.S. operations like e-commerce and marketing. A 7-member board will lead the venture with an 80% ownership by a U.S. investor consortium. Donald Trump's plan to allow NVIDIA to export advanced AI chips to China has drawn criticism from prominent Washington China hawks, including within his own party. Opposition grew as the House Foreign Affairs Committee advanced the AI Overwatch Act, a bill introduced to increase congressional oversight of AI chip exports. EU lawmakers will proceed with ratifying the trade deal with the US after Trump withdrew his threat of tariffs. The process, previously suspended over coercive threats, has resumed following Trump's reversal. European Parliament President Roberta Metsola confirmed a preliminary vote may occur soon. According to new data released today by the Japan Statistics Bureau, the National Consumer Price Index increased by 2.1% year-on-year in December, down from 2.9% previously. Additional details show that the national CPI, excluding fresh food, rose by 2.4% year-on-year in December compared to 3% in the previous period. This result matches market expectations. Japan's central bank kept its policy rate at 0.75% as elections approach, while raising growth forecasts. The Bank of Japan now expects GDP to grow by 0.9% in the fiscal year ending March 2026, up from 0.7%, and by 1% in the following year, up from 0.7%. U.S. equities advanced for a second consecutive day following President Trump's withdrawal of his proposed tariffs on Greenland and consideration of a potential deal framework. NATO Secretary General Mark Rutte informed Bloomberg that Denmark and Greenland are receptive to increased U.S. involvement. However, discussions with Trump did not address Greenland's sovereignty. In November, the U.S. Personal Consumption Expenditures Price Index, which serves as the Federal Reserve's primary forecasting instrument, reported inflation at 2.8% for both headline and core measures. This outcome aligned with market expectations but remains above the central bank's 2% target. US real gross domestic product grew at an annual rate of 4.4% in Q3 2025, beating both the initial estimate and market expectation of 4.3%. The 0.1 percentage point upward revision was mainly due to higher exports and investment, partly offset by lower consumer spending. Imports were also revised higher, according to the Statistics Office. And the Atlanta Fed is now projecting that Q4 GDP in the US will be as high as 5.4%, another record high as exports and investments continue to significantly increase. The US Federal Open Market Committee, that's the Fed's rate setting committee, is set to meet next week and is expected to hold rates steady. Crude oil and gasoline prices dropped yesterday after Ukrainian President Zelensky indicated progress in peace talks with Russia. Prices fell further when the Energy Information Administration Office reported unexpected increases in crude inventories and gasoline supplies, which reached a 5-year high. However, a weaker dollar is currently supporting energy prices. Early today, Brent remains steady above $64 per barrel. Amazon will cut about 14,000 more corporate jobs next week, matching last year's round as part of its plan to reduce 30,000 white-collar positions. The layoffs could begin as early as Tuesday. Paramount Skydance has extended its hostile tender offer deadline for Warner Brothers Discovery by roughly a month, moving it to February 20 to allow more time to convince investors that its proposal for the Hollywood studio is superior to a competing deal with Netflix. Blue Origin, the aerospace company founded by Amazon's Jeff Bezos, has announced plans to deploy over 5,400 satellites to establish a new communications network named TerraWave. This system aims to provide continuous global internet coverage and facilitate the rapid transfer of large volumes of data, surpassing the capabilities of competing services. Despite these extensive deployment plans, Blue Origin's satellite constellation will remain smaller than Starlink, the current market leader operated by Elon Musk, which maintains a significantly larger number of satellites in orbit. This year's Davos flagship World Economic Forum concluded with a focus on dialogue. The event was marked by a clash of differing opinions that may have seemed chaotic and turbulent at times. As we transition into a new era where established rules might not apply, it is crucial for everyone to recognize that their perspectives must be open to thoughtful questioning, even if this process feels unsettling. Heated debates are acceptable and some instability is to be expected. However, what is unacceptable is failing to take swift action to promote well-being and prosperity in more countries. All of this is happening while a new narrative of progress takes shape. My greatest hope is that if Davos cannot provide the solutions we urgently need amidst all the noise, division, and divergence, other forums will step up and fill the void in a global economy that consistently demonstrates remarkable resilience despite formidable challenges. And on global markets, Asia-Pacific equities were mostly higher, tracking Wall Street gains from the previous session as geopolitical concerns eased and investors assessed the Bank of Japan's decision to keep interest rates steady. The South African rand reached 16.21 against the dollar. That was yesterday its strongest level since August 2022, following eased geopolitical tensions after Trump withdrew tariff threats and ruled out using force over Greenland. Well, that's it on this special edition of Global Business Insights. This is Bode Oshosani. Please don't forget to subscribe and hit the notification button. Thanks for watching. Enjoy your weekend. Bye-bye.